into the webinar, and also gives you a chance to invite somebody and make somebody's day. Send out to them the registration link. Somebody you see that's not here already. Get them to come in and join and hear this great news at the beginning of the year that can change their life. Right? So indeed, welcome, welcome. So we'll start exactly at 10:03 in order to make sure that everybody has come in and they do not miss anything. Thank you. So as promised, we're starting now. And again, I welcome you to today's Investor Education Series that is titled Positioning for Growth, Leveraging Opportunities in a Bullish Market. And today's webinar is done in partnership with United Capital Securities Limited. And you guess what? This webinar will leverage NGX's recent market performance as an anchor to educate you, to inspire and empower you to make investment decisions. And these investment decisions will change your life all through the year. So if you want to make somebody's day or year, send them the link that you use in registry to join, for them to enable them register and join immediately. My name is Ugochi Obi, and I oversee the affairs of the Nigerian Exchange X Academy, which is the learning center for all capital market education in the capital markets, right? So to start off this webinar, and I hope you can hear me and I hope you can see me, remember that you use the chat to drop such things like me asking you right now to just put it in the chat that you can hear me. Put one word. Just be sure you can hear me and you can see me. But please, all questions should be at the Q&A. There's an icon below the Zoom that says Q&A. Put in your questions there. That's where we'll pick up your questions during the whole session. So not to hold back and to start off immediately, it is my pleasure for him to give his opening remarks. It is always my pleasure and privilege to introduce to you the Chief Executive Officer of the Nigerian Exchange Limited, Mr. Jude Chiemeka. Jude, please.
Thank you very much, Ugochi, and good morning, distinguished ladies and gentlemen. Thank you for joining us today. On behalf of the board and management of Nigerian Exchange Limited, it gives me a great pleasure to welcome you all to today's webinar themed Positioning for Growth, Leveraging Opportunities in a Bullish Market. I'm delighted to see so many retail investors joining us, demonstrating your commitment to enhancing your financial literacy and investment knowledge. As we gather here, it's important to acknowledge the dynamic environment in which we are operating. The Nigerian capital market has demonstrated remarkable resilience, supported by improving macroeconomic indicators, increased liquidity, and renewed investor confidence. The exchange recently achieved a historic milestone, with market capitalization surpassing over 100 trillion naira, a significant marker of the depth and growth of our capital market. So in broad terms, Nigeria is now third in Africa in terms of market cap, second to South Africa and Morocco, currently at 85 US billion dollars as market cap on the equity side. Even though as an exchange, we're a multi-asset exchange, so we do offer products away from equities that will include fixed income, ETFs, and more recently, derivatives. As we gather here, it's important to acknowledge the dynamic environment in which we're operating. And it's important to also point out that the momentum is significant and it is growing. It signals that retail investors are not merely observers of market growth, they are active contributors as well. However, participation alone is not enough. Sustainable wealth creation requires strategic positioning, disciplined decision-making, and a clear understanding of market cycles. This is very important. We're currently in a bull market. Bear in mind that the market also has a bear market. And so in a bull market, it's really important to understand the dynamics of the market. At this point, I must say that don't assume you're an expert. It's always important to speak to your stockbroker. Make sure that your stockbroker, who are your financial advisors, play a critical role in your decision-making process, which is one of the reasons why we're having this session, to make sure that you're well educated, right? Because in a bull market, there are tendencies of a herd mentality in some of the stocks. Just be sure that your investments are anchored on strong fundamentals in case the market turns. Today's webinar is therefore very timely. A bullish market presents opportunities, but it also demands prudence, understanding of sectoral trends, identifying fundamentally strong companies, diversifying appropriately, and managing risk are all critical to maximizing your returns while preserving your capital. Our market continues to grow. Currently, we trade $21 million. Last year, we finished an average of $60 million per day. We've already traded over $700 million on the equity side. So it's a growing market and interesting times, and we expect more growth even as the market continues to move to reflect the strong macroeconomic environments that we operate in. Through initiatives such as this, NGX remains committed to deepening financial literacy, expanding access to market opportunities, and empowering retail investors with the knowledge required to navigate evolving market conditions confidently. Retail investors continue to play a critical part of this whole cycle. As at last year, December, we have over 1.8 million active retail investors that play in our market. And so if we dimension the value of trades that were done last year, which is in excess of $3 billion US, the retail investor participation in the market will be looked at from the domestic positioning of investors. So 22% of value of trades done last year were done by international. So of the 78% that were done by domestic investors, retail investors continue to play a significant role, growing from their traditional 20% market contribution to over 33% market contribution. Today, you will hear from an experienced market professional who will provide practical, data-driven insights to help you navigate opportunities in this bullish market while managing associated risk effectively. This is very important. Let me reiterate. In the bull market, it's very important for you to be anchored by your financial advisor. So talk to your stockbroker, make sure that their research is guiding your decisions to make your investments. I encourage you to engage actively, ask questions, and leverage the knowledge shared to position your portfolios for sustainable growth. I welcome you once again and trust that today's session will equip you with actionable insights to unlock greater value in your investment journey. Let me also conclude by thanking our partners, United Capital Securities, for their participation. And I'm sure you will definitely be learning a whole lot of techniques that are data and research driven to make sure that you maximize the benefits of investing in the Nigerian capital market. Thank you very much for your time, and I wish you all a successful session.
Thank you so much, Jude, for that. Indeed, in a bullish market, remember that it's important that you speak to your financial advisors, speak to the stockbrokers. And with that, I will invite the MD of the United Capital Securities Limited, our partner for this webinar, Mr. Bawo Orisha Jaffo, to please give us his brief remarks as well. Thank you.
Thank you, Gucci, and thank you, Mr. Duchi Emeka, the CEO of Nigerian Exchange Limited, for having us here today. Good morning, distinguished participants, colleagues, ladies and gentlemen. It is a pleasure to join you at this quarterly NGX webinar focused on Nigeria equity market growth, opportunities for retail investors. I would like to begin by congratulating the Nigeria Exchange Limited on the remarkable milestone of surpassing the 100 trillion naira in equity market capitalization. This achievement reflects not only the strength of our capital markets, but also the resilience, innovation, and sustained commitment of the exchange to deepen Nigeria's investment landscape. This milestone is particularly significant because it demonstrates the growing confidence of issuers and investors in the Nigerian capital market. It also highlights the critical role of the Nigerian exchange continues to play in enabling companies to access long-term capital while creating opportunities for institutional and retail investors. At United Capital Securities Limited, and indeed within the broader United Capital PLC group, we remain firmly committed to strengthening our long-standing partnership with the NGX. We recognize the importance of continuous market education, transparency, and broad-based engagement in driving financial inclusion. Indeed, webinars such as this provide an essential platform for investors, especially retail participants, to gain insights, build confidence, and make more informed decisions that support long-term wealth creation. We are proud to collaborate with NGS on initiatives that improve market literacy, expand product offerings, and ensure that our retail investors are not only participating, but also empowered to benefit meaningfully from the opportunities within the evolving equity market. As the markets continue to expand and diversify, we will continue to support efforts that promote investors' access, deepen liquidity, and enhance market efficiency. Once again, congratulations to the NGS leadership and team for their vision and consistent execution. United Capital PLC remains a dedicated partner in advancing market growth and supporting the investing public. To provide deeper insight into this landmark achievement and what lies ahead, it's my pleasure to introduce our Chief Economist at United Capital PLC, Mr. Ayodele Akinwumi, to a seasoned macroeconomic strategist who will be taking us through the implication of the NGX 100 trillion naira milestone and what it means for the future of Nigerian capital market. Thank you all and enjoy this session with us.
Thank you so much. Thank you so much. And indeed, yes, I hear when you say make informed decisions that will allow for long-term investment. And that's exactly what we're doing here today. So thank you for that indeed. And just like he has mentioned, we're going straight into the market growth opportunities and what it means to retail investors. So that it's happening, what can you do? And you hear all that from the Chief Economist for United Capital Securities Limited, Mr. Ayodele Akinwumi. Mr. Ayodele, good to have you here.
Thank you very much. Thank you for having me. Good morning. First and foremost, I'd like to thank the management, the board and the management of the NGS for inviting me, for creating this platform to engage the audience and the investors in the Nigerian capital market to share our thoughts about the current market dynamics and the outlook. And I want to congratulate the management on the growth, phenomenal growth in the market that we have seen in the last few years. So I'll go straight into the presentation, and I've been told that there will be opportunity for question and answer at the end of the session. So this is the growth in the market in the last almost 6 years, from December 2020 till 17th of December. As we can see in that place, the market capitalization actually grew by over 400, almost 500%, 477%. This is significant, and this is what I call avenue for long-term wealth creation. However, what we call the market depth, which is the ratio of the market capitalization to the nominal GDP as we've used in this place, shows that, yes, it has increased, but it's still a bit low. More companies are going to be listed. We are working together to ensure market operators, regulators, and all market participants are working to ensure that more companies will be listed. I think one company just got listed this year. And I'm sure in retrospect, the company that just got listed, the management, the shareholders will realize that they've made very good decisions to have come to the market, because the share price has been appreciating since that time. That sent a very strong signal to the market that market is receptive of new listing. Investors are excited about companies coming to the market to create opportunities for investors to earn, to create long-term wealth in the market. So this is expected to improve as we go on. This is also the performance of the equities market in the last, from 2015 till last year. In the last 6 years, market has shown consistent growth. And each time I look at this chart and I say, this is a good market to sell, and this is a good market to be in. The fact that the equities market has appreciated consistently for 6 years. And in fact, our analysts are also projecting that this year, the market will appreciate by about 31%. Looking at what has happened year to date with 22%, I'm sure perhaps this number will have to be revised upward as we go on into the year. But this is to say that the market is strong. The market is responding to the development in the macroeconomic environment, and the market is also responding to the transformational efforts of the NGX and all the things that they are bringing in, which I'm going to show very shortly. Now, if you look at the performance of our market also compare with other developed markets and some other emerging markets, last year we recorded 15.19%. And among the companies that we track here shows that our market led the pack, which is very good, with 51% return, 51.9 actually, the actual return. This is not just, as we're going to see very shortly, that we see a lot of stocks that performed far much more than this. And if you look at the next one, 28% there, up to CAC 40, which is the stock exchange in France, recording 10%. And each time I engage investors, I say, if you are not in this market, you are not creating long-term wealth. Now, the next thing is to also look at it again in terms of year-to-date that I mentioned earlier. Our market is still leading the pack also with 22% year-to-date as at 17th of this month when we were having the documents. So this is a great market. Even the CEO of the NGX spoke earlier to say that you need to continue to engage your stockbrokers, professionals, to ensure that, because market do not move in just one direction. There could be a correction, people could take profits, but we are going to get there and see the strategy that we need to apply. Now, one of the reasons why the market has done well thus far is because of the declining yield. on fixed income security. There is an inverse relationship between the equities market and the fixed income market, all things being equal. Yield on fixed income market dropping shows that there could be a portfolio reallocation away from fixed income to a sector of the market where another sector of the market where investors will want to earn higher return. So there could be liquidity flow. That's number one. Number two is the fact that funding cost will reduce. And as funding costs reduce for corporate companies that are listed, it then means that profit, distributable profit will increase from which investors will earn, dividend. And that means that expectations of higher dividend will increase and which will impact valuation. That's what we are seeing in this place, and alongside with other macroeconomic developments that we are seeing in the country. So these are big major drivers of the economy. Like I mentioned, macroeconomic stability, strong GDP growth we've been seeing, and which we are going to see again this year. Naira appreciation, declining interest rates, moving to reforms that we have seen in banking, insurance, pension, even in FX market, going into also strong institutional quality, both from the regulators and even the operators. And alongside that, we have seen the digital transformation at the exchange also creates opportunities for retail investors now to just through their phone to buy stocks. And therefore, you don't even have to send mandate to your stockbroker. As long as your account is funded, then you can, trade at the comfort of your room and anywhere you are. Again, the strong corporate earnings, revenue, and profitability growth, and then dividend declaration. The last point I'm going to mention, which is very important, is the fact that there has been growth in equity, based mutual funds. And this is very important for retail investors, that you give your funds to experienced fund managers who can take decisions on your behalf. And you just continue with your work, you continue with your business, and then they make that informed decisions. Funds that have exposure in the equities market, and you bear you enjoy the return. So this is very good, and of course they are well regulated by all the regulators, the Securities and Exchange Commission, and to ensure that we have professionals who are well qualified and competent to run the business. And so this is very, very important. Now, these are major drivers that we have seen in the market. Of course, the latest tax reform, people talk about the negative side of it. We're going to pay more tax, yes, but then there is also an advantage in the fact that some corporates, the tax, corporate income tax is going to be reduced from 30% to 25%. That means also increase in distributable income, and which will also go a long way to increase the dividend that these companies are going to be paying. Now, small businesses, they are going to have tax exemption, and what that means also is that there will be a lot of activities that will be generated from that area. Money will flow, purchasing power will increase, from which they can go ahead to also invest. Now, the fact that they are going to also reduce VAT on certain items, food items, education, healthcare, those will have impact on the stocks like Nestle, Cadbury, Nigerian Breweries, and we're beginning to see it. Nigerian Breweries, Nestle now has moved from a static position to almost 3,000 naira, and just because per share, just because of all these developments that are going around that are impacting the entire market. Now, what are the benefits of investing in the equities market? Number one, opportunity to be part owners of companies of your choice. Oh, I'm spending money, I own MTN, SIM, I own Airtel, I want to be part of them. So as low as whatever money you have, you can be part of that company. And then at the end of the year, the cash flow that they are generating, some of them goes to you. Now, the opportunity for compounding your return, and I'm going to speak about this one later, which I call it miracle of compounding return. And that speaks to the fact that either the market corrects temporarily for whatever reason. If you are in the market for a long time, all the dividend you get, you reinvest it. The bonus you have, you put it back into the market. You are going to make a lot of money on the long run. Then the bonus, capital appreciation, you buy today at 10 naira, the price goes down to 15 naira, 20 naira, as we're going to see very shortly. And then lastly, is the dividend payment that investors will get. And then to get the benefit of the compounding, what we always advise our clients is, and investing public, is the dividend you are getting, don't spend it, reinvest it, maintain a long-term view of the market, and then you are going to have that miracle. Now, this is what happened last year. We just picked these random stocks, about 5 stocks, and assume that you invested 100,000 naira each on them. So your portfolio carries 500,000 investment at the beginning of the year. What happened at the end of the year? Some of the companies, like I said, declared dividends, like you can see in that place, and then we adjusted by the withholding tax on those dividends. The portfolio returned 307%. So a portfolio of these 5 stocks last year recorded 317%. You say that the entire market recorded 51%, but then if you are selective, if you invest very well, you pick good stocks, you can beat the market. And that is what has happened to these securities. And I think this is a very good investment. This, well, for me, beat inflation, beat exchange rate devaluation, beat all manner of anything. But again, going beyond just 1 year, let's see what happened if you had invested in the market for about less than 7 years, from 2nd of January 2020 till 17th of February 2026. The portfolio recorded a massive growth, return of 933%. And that was, you had 10.33 times your initial investment. And how did we arrive at? If we imagine that you invested 1 million naira in these select stocks also, Seplat, UBA, MTN, Dangote Cement, GTB, NGX. We dropped NGX on this table for a reason. NGX was not listed on the exchange 2nd of January 2020. I think it was listed around October 2021. But the reason why we did this is just to look at even the company that forms part of the platform where we trade, what has happened to their performance. And because it speaks volume, if the performance grew well, it means that they are doing something wrong, something good. And like I mentioned earlier, part of the performance we have seen in the market is strong institutional quality and the transformation agenda that the current leadership of the stock exchange has brought into the market and that they are driving, one of which is what we are here for, to educate investors. And of course, during his opening remark, the CEO mentioned the fact that don't be caught up. Market do not move in one direction, which is solid. But if you maintain long-term view in the market, those volatilities, those temporary drop, can even create an opportunity for you to even do what we call averaging out. Oh, you buy M10 today as over 700 naira. If per share, if for whatever reason the price dropped to 600, you have the opportunity to buy cheaper, and you buy it, and then as time goes by, the price still goes up back to 800 naira. It means that you have made additional money by the drop. So if you do the investment this way, you realize that you compound your return, and the dividend you get from the stocks, you reinvest it to the market, you are going to get a lot of money. So the share price of, for instance, for Seplat on the 2nd of January 2020 was 592. As at September, it was, at 17th of February, it had moved to 8,000. That is massive appreciation of 1,319 return on price movement alone. Now, all the dividends that the company had paid, during this period, if you had reinvested it, as we assume that you reinvested the day you received the dividend, what it means is that your unit that you had from the beginning, from 1,658, has moved to 2,003. The value of the investment at that time now becomes 18 million. Can you see how you have moved from 1 million to 18 million within less than 7 years? The net tax, the net dividend you earn for that period is 1,400. 1,400,000, which is much more than the initial amount that you committed into doing the transactions. And these are net of, transaction cost, withholding tax on dividend and all of those. You have made a profit of 17 million naira. Like I said, a growth of 1,751. This is massive. And as we are going to show very shortly, people talk about devaluation of the currency. People talk about, exchange rates. People talk about inflation. This return is inflation adjusted. It is exchange rate devaluation adjusted. Now, in other words, you have real return on your investments. NGX that got listed in October 2021 till date has recorded a growth of 580%. And like I said, we brought this one here to show us that this is something that the NGX is doing something good, transforming the market, creating platform, doing something good in the market, increasing the strength of the market, and therefore is also reflecting in the group company that is listed on the exchange. In other words, the portfolio actually returned 933% within less than 7 years. This is phenomenal. This is very good. And this is why we are saying to benefit from this, miracles of compounding, maintain long-term view in the market, avoid the noises. In fact, Warren Buffett says that when the market is fearful, just be greedy. And when the market is, of course, greedy, be fearful. Now, these are just the pictorial representation of what we did in the last slide. Investment of 1 million has moved to, for Seplat, moved to 18 million. You've got total dividend of 2.2 million, return of 1,751, and then a profit of 17.1 million, which is very, very significant. Now, what we have done here is, particularly for some of our brethren, some of our brothers, Nigerians who are living abroad, and they are thinking about, I earn dollar, I earn pounds, I earn foreign currency. Your currency is not a good investment vehicle to preserve my wealth if I repatriate the money. Or even some of us who are here who are also saying, Naira investment is not a good store of value. It's not a good preservation of value. What we have done here is to assume we compare the returns on all these stocks with if an investor had also invested 1 million naira equivalents in a dollar-denominated investment on that day, 2nd of January 2022, what will be the return as at the end of 17th of January this year, February this year, the day we did all this valuation? What we came, and the assumption is very simple. You convert it to dollar, the naira 1 million to dollar at the exchange rate on that day. You invested the money at 10% compounded every year. Meanwhile, that assumption is actually very aggressive anyway, but we use that assumption. On that same day, there is a transactional cost about $90 that was taken out of the investment. We applied 10% withholding tax on the investment. The investment that day had recorded 618%, which is lower than the average portfolio return that we got on the equities. So when you are thinking about converting all your investments to dollar investment and move out of the country, you have to have a rethink that indeed there is a market. Our market is actually give you opportunity to grow your wealth, not only on a nominal level, but on a real level and a sustainable level, that you preserve your edge against currency devaluation, and you also, I edge against inflation. Now, these are the risks. So it's not just investing in equities market carries some risks. Market risk, price volatility, it can go up. But like I mentioned, if you have picked good stocks with the guidance of your fund investor, your advisor, if the price comes down, what you can do is to take advantage of that to even enter the market to buy more. I remember during COVID, when the entire world, was on a lockdown, there are some stocks today that are trading at over 40 naira, but they came down as low as 50 kobo at that particular time, sub 1 naira per share. And within a period of less than 7 years, they have moved from that less than 1 naira per share to where they are today, over 40 naira. So if you have picked solid stocks, MTN about a few years ago was about 100 naira. Today, it is now moving towards 800 naira, over 70 naira, 700 naira per share. So pick good stocks, stay there, earn dividend, reinvest the dividend. If you have bonus, regret the bonus, and then stay on the long term, and then you will ensure that you make very good money in the market. Company specific risks, maybe poor management that leads to weak financial performance, liquidity issue, particularly for small caps, currency issue, I've explained that, economic and political risks, recession, policy changes, and then, of course, these are mitigating factors that we have also introduced to you there. Of course, the CEO, as if you have seen my slide, he talked about the emotional part of the risk in the market earlier during his presentation. These are factors that are real in the market, but there are ways that you can, ensure that you mitigate some of those risks. Interest rate risks, I've explained that. When interest rate is coming down, then it's positive for equities market. When it is going up, it makes, investment very expensive. Companies' cost increases, and then distributable income reduces, and vice versa. Now, what are we seeing in the global macroeconomic environment this year, and how do they impact the markets in our view? We believe that the growth, the GDP is expanding. This means activities are increasing. It means that companies are expanding their capacity to produce more. It means confidence in Nigeria. Our forecast this year, maybe GDP will grow about 5.45%. Fourth quarter improvements, and this is positive for equities market. What about key rates? Inflation rates, the latest now we have now about 15.1, December 15.15, January this year has dropped to about 15.10. Our outlook this year is that inflation rates will average about 9.41, which is single digit. As a matter of fact, given the latest figure, by May this year, we'll expect that inflation rates will drop to a single digit. And what will that one mean? It means that central bank now has opportunity to, with stable environment, with stable exchange rates, and opportunity to lower rates. As they lower rate further, yield on fixed income securities will drop. It then means that equities market will have another opportunity to grow further. We have seen accretion to external reserves, which will position our exchange rate better. Monetary policy, like we said, prospect of reducing interest rates, and then to stimulate growth. Exchange rate, this year, we've seen what's happening there, stability, and this is very important. We are beginning to see a lot of clients who are saying, oh, what can we do? Selling off their dollar if they don't need it now, and to buy back later, and they are investing in equities markets. So these are, and of course, foreign investors who are the sideline before, they are coming in with foreign exchange stability. What it means is our appreciation. What it means is that beyond the return that they make on equities market, they are also going to make return on exchange rate differential. And this is also very good for us as we talk to our Nigerian in diasporas, our brothers and sisters who are working hard, who are making money and are investing the money at 3%, 4% over there. Tell them we have a market that the macroeconomic environment is improving, and then they can create long-term sustainable wealth in this place, rather than investing in something that is giving them just 1%, 2% abroad. Bring the money here, your currency is protected, and then over time, if there is the currency depreciation, the growth in the market like we have seen over the years is enough to compensate you for the risk that you are taking. Now, what is the equity investment strategy that we think retail investors should consider? In addition to what we have discussed, number one, equities-based mutual funds. Now, this is very critical for retail investors because they may not have the expertise to navigate to choose individual stocks. But you give your investments, however small it might be, you can be committed to 10,000, 20,000, 50, depending on your capacity, on a monthly basis to a fund manager that is registered and licensed by Securities and Exchange Commission. And you give them instruction, this morning, use it to buy equity-based investments, funds. And their job is to look at the market, wake up every morning, and they have research, they have companies who competencies, knowledge about the market, and they select. Sometimes people are, of course, SEC has also come up now with contributions and then cooperations of the central bank and banks to ensure, and registrars to ensure that immediately a company declares dividends, the account of the shareholders are credited immediately. You have value for your money with which you can invest. But for a fund manager, they follow the money. Immediately that is done, in fact, before the money is received, they already have a map out plans on how that fund will be invested. So there is no idle fund for them. Now, you can also go into equity index investing. And like I mentioned, the product that the NGX has actually created in the market, they have a lot of indices, equity-based indices that they have created. You can mimic them. You can pick up the banking index. Oh, I want to invest in banking stocks. Just pick up, look at the stocks they have in that indices, that index, and then move your portfolio around it, invest in all those stocks. And then you can with that, you can mimic the performance of that sector. Oh, you are interested in insurance, or you are interested in oil and gas. They have indices in that area. Oh, NGX 30, the most capitalized stocks. They can pattern your investment along that level and pick up those stocks and invest in them. Again, another one is exchange rate funds. There are a lot of them in the market also. And what does this one mean is that it's tracking certain indices in the market. And therefore, when you have an exposure to one ETF unit, it means that you have exposure to all the companies within the basket. So you diversify your risk. So the movement, volatility in one price, as measure of risk that we mentioned earlier, does not really impact you so much. So these are, investment strategies that retail investors can take advantage of in the market. And I believe that with this, we are better informed and better equipped to take advantage of the opportunities in the market. Thank you very much. I will now stop here to take questions.
Thank you so much, Mr. Akinwumi, for that. That was indeed fantastic. The Chief Economist for United Capital Securities Limited. And indeed, I hear when you say, speak to your financial advisor, your experienced financial advisor, your stockbroker, choose your stock and reinvest your dividend. That is indeed a wise decision to make. You spoke about those abroad, and there came up a question for you. It says, how do we assess these opportunities for those living abroad? This is by Paul. How do we start?
Okay, thank you very much. I think there are a lot of what you need to just do is to pick up, search through various websites or speak to any of the stockbrokers of your choice. We are available here. Call us, send an email to us, or any stockbroker that you have interest in. You can also get to the stock exchange. We have lists. They can get to Securities and Exchange Commission. They have lists of registered stockbroker. But what is important is that in all of this, like we mentioned, don't speak to people who are not registered by the Securities and Exchange Commission to do this business. You can lose your money if you are dealing with someone who is not registered. So once you send an email, then they will take it up there. You open an account, there are some requirements you need from some you need to fill. If you are not in Nigeria, there are some few things, document that will require from you. Once we do that, we open an account with you, with CSCS with us, and then you fund your account. Like I said, the good news is that anywhere you are around the world now, at least for most stockbroking firms in Nigeria, which is what the probably things that the NGX has created, that you can now trade remotely. So they have embraced digitalization, which means that you can, anywhere you are around the world, you can trade. Just fund your accounts. As long as your account is funded, you don't even need to relate with them if you have understanding of what to buy. And of course, a number of stockbroking firms also, like us, we have research units that we make recommendations. So if you don't know what to buy, you can speak to the research team. You can subscribe to their newsletters where stock recommendations are given on a weekly basis. For us, we issue that on a weekly basis. So that's how to start, and that's how to get knowledgeable. One of the things I always recommend is the fact that NGX is doing this, which is part of the investors, knowledge sharing that they have in the market to ensure that everybody knows what is going on. And the more you read, the more you invest in the market, you read articles, you read research report, you get knowledge about how the market moves. Or if you do not know or have time for all those ones, and that's where this strategy comes in, just ensure that you identify an asset management company that has equity-based mutual funds and open an account there. Once you do that, every month, you can even set up, a debit alert on your account on a monthly basis. X amount of money should go to my investment account with this company, and then let them buy nearly they receive that fund. So those are some of the ways to start. But the first thing to do is to identify a registered, a SEC license operator in the market, and then they will tell you the things you need to do, and then you start investing.
Fantastic. Thank you. Indeed, the NGX website also has that. So you could just check that and you see the list of licensed or appropriate stockbrokers to speak with. So that also answers Pascal's question. And then the final one is, okay, I see another one. But one other question is, how has technology assisted in increasing performance of the equity market on NGX?
Excellent question. I think I mentioned something like that earlier also, because what it does now is, two ways. Number one, in terms of what the NGX has done itself, like I said, point 3 here, under strong institutional quality, digital transformation at the exchange. People now can trade anywhere. You can trade at least during the trading hour. You have access to information, because the information, the market also is information driven. On the NGX website, I visit that site several times in a day, because I want to be able to ensure that as immediately a result is released or new information is shared in the market, I digest that information and I form an investment, an informed opinion about it to enable me engage our clients. Now, so that is, as technology has helped the NGX to render timely information to the market, with which investors can take informed decisions. An analyst can also process them to, either revise their forecast, either upward or downward, which means that there is adequate information on which investors can take informed decision. Number one. Number two is the fact that the trading angle, people can trade anywhere remotely. On your phone, you can trade remotely. And that means that retail investors now do not need to worry on, sending mandates, wasting time. Just as you are doing your work in your office, at home, you can just open your laptop, open your phone, and see what is going on in the market, have information in the market. Oh, why am I buying this? What is going on now? And you send. Now, it also has increased credibility and transparency in the market. Oh, I send mandate to my stockbroker. He says he bought it at at 10 naira, meanwhile market trade at 20 naira. Market trade at 5 below that. You can trade yourself. So you see the market live and you trade yourself. So it increases credibility, increases confidence. So it enables the market also wider array of clients to have access to the market, which increases liquidity in the market. So people are abroad, wherever you are in your village, you can have access to the information that people who are at the exchange also have access to. So that is very critical. And I think those are the areas that we have seen a lot of improvement in using technology to drive activities in the market.
Thank you. And I think I can squeeze in this question. It says from Molly, it says, with the current ETF funds at all-time high, what would be your suggestions for investors to do?
Okay, so when M10, I would take M10 for instance, when M10 was 500, 600, we were thinking all-time high. It moved to 600, all-time high. It moved to 700, all-time high. Perhaps when it goes to 1,000 naira, we'll be saying, oh, if we had known, we'll have bought at this level. Like I said, sometimes once your market can correct, there could be profit taken. New information can come to the market that will change certain things, like we mentioned in this place, macroeconomic information or whatever. It could be positive or negative. However, if you have carefully chosen stocks to buy or ETFs to buy, which also tracks underlying stocks, and so the performance of the ETFs depend on the performance on the companies that it tracks. But the benefit of that is that it tracks wider array of company stocks within that basket. Now, if the price comes down, what you do, buy more, average out. If you are a long-term investor, if you get dividend, when the dividend comes in, buy more. And that was how we were able to achieve the kind of returns that we achieved on this table here. 933 naira. 903%. Some of the dividend that we reinvested in this model were received when market came down. And so you are able to buy more units. Some of them, market went up, you buy. So what is important is that immediately you have money. I mean, but 10 years ago, as you can see even on these charts, I have a client who spoke to me this week. Oh, when Seplat was at 500, I thought it was too high. But yesterday, I think it crossed over 9,000 naira per share. Maybe with the development there again, maybe if they made additional acquisition, the price can go to 15,000. Who knows? So, but what is important is that what is your dividend yield? What is the earnings? What are the potential? What are your strategy? If you're not comfortable with it at this price, go to another company that is you are comfortable with. But what is important is that you are investing. You save money, you channel to investment, and you are guided on what you need to do. On the long run, your investment will grow. You will get return from there, and it outperforms, perhaps fixed income market returns.
Thank you. Thank you. Quick answer to this question. It says, if you have a portfolio with some of these apps out there, can you move your portfolio equity to another platform? Quick answer.
So I don't get what the question is.
If you have a portfolio with some of these apps out there, can you move your portfolio equity to another?
Okay, so I think, yes, you can. There are processes in which you can move your portfolio from one company to another company. But again, once you speak to your stockbroker, they will tell you the process. There are forms you need to fill. Then they will move from one house to the other, and then there are requirements that you fill to show that. So there are opportunities for you to move your investment from one house to the other.
Okay, I have another one. Just 1 minute answer. It says, can you explain when a stock is listed as introductory? Because I tried purchasing Zishes, but could not get my order executed.
When the stocks is listed by introduction,
Yes, yes.
Okay, so that is just a time when a company is coming to the market for the first time and they are not raising money at that particular time. Perhaps they have done private placements and then they now want to get listed. That listing is called listing by introduction. And I think the company that was listed this year was listed by introduction. Okay, but if the initial time they are coming to the market is through raising money from the market, then that is initial public offering. And if the company is staying in the market and they are going to raise additional money from the public, that is, public offering. But initial, by introduction is that they have raised money, they want to be listed on the stock exchange, and then for allow investing public to now begin to have access to their shares and to widen it. That's by listing by introduction.
Thank you so much, Mr. Akinwumi, for that session and for answering all the questions. We have some more, but unfortunately, it's time to give our closing remarks. Indeed, if you want to keep being informed, if you want to learn more, please come to the X Academy. You have more information there and you are trained as well for that. So with that said, please do not forget to always tune in each time we have this investor series out. Register, join in, and make sure you keep informed. So with that said, I'd like to call on the head of the Department for Trading and Products in the Nigerian Exchange, Mr. Abimbola Babalola, to please give his closing remarks to the session. Thank you.
Thank you very much, Ugochi, and thanks for anchoring this program. Distinguished participants, ladies and gentlemen, as we conclude today's webinar, I would like to sincerely appreciate our speaker for the valuable insight that they have shared with us this morning, and also to thank all our retail investors who have taken the time to participate in this important conversation. Today's session has reinforced a critical message that while the market continues to provide or present opportunities, sustainable success requires strategy, discipline, and informed decision-making. At NGX, our commitment remains focused on strengthening the market structure, improving liquidity, expanding product accessibility, and ensuring that investors operate within a transparent and efficient trading environment. We encourage you to continue engaging actively with the market, leveraging on tools, visiting our website and also various websites, leveraging on data and professional advice that is available to you, which will expect that you will engage your brokers so that they give you information. Investors education remains central to our mandate, and platforms like this webinar are part of our broader effort to equip you with the knowledge needed to navigate evolving market conditions confidently. Thank you once again for your participation and continued trust in the Nigerian capital market. We look forward to your sustained engagement and success in your investment journey. Do have a pleasant day. Thank you very much.
Thank you so much, Mr. Babalola. And do remember that the NGX is open, always open arms to retail investors. They're important to us. We are always open to them. So remember, join us in the next Investor Education Series. And thank you again to our partner for joining us today, and to you for giving us your time. Have a wonderful day and enjoy the rest of the week. Bye.
Thank you very much. Bye-bye.
Thank you very much. Bye, everyone.
Bye.